You're listening.
Right, let's get moving. Talking finances with the team from 27-4. Orin Tambo is with us, as he always is, part of the team, head of investment strategy at 27-4. Orin, I appreciate your time. Good morning.
Good morning. Thanks for having me.
Good. I'm not too sure whether investment people like long weekends or they realize there's like 2 days short in the month, and it has implications in terms of how the economy ticks anyway, right? Perhaps that's a necessary lead into what you want to talk about, which is the issue of jobs, right?
Yeah. So I think, because of the long holiday, there was not so much news in the market. So most of the markets in the US, Europe, and locally, I mean, they have to go for this, religious holiday. But yeah, we did get some numbers from the US, which are very important. Investors have been watching the jobs numbers coming from the US for two particular reasons. The first being that, just to use those numbers to gauge the strength of the US economy. And secondly, to also gauge what the Federal Reserve Bank would do. It has been looking at the job market, and the Fed has been concerned that the job market is too tight. In other words, the US is creating too much jobs than the number of people that are unemployed. So it's something like that. So we saw the numbers coming through on Friday. The economy created about 311,000 jobs during the month of February. The market was expecting, something in the region of 215,000. So the numbers that were created were actually more than what the market was expecting. And yeah, so essentially, I think what that number is telling us is that the U.S. economy continue to be more resilient than what the market would want it to be. But again, I think probably the silver lining from those numbers is that when, as much as it outperformed the expectations of investors, when you compare to the average over the most recent months, it was way lower than what the US has been creating on a monthly basis. So on average, I think over the past 12 months, we've seen the US economy creating in the region of 491,000 jobs a month on average. So this 311,000 is still ahead of what the market is expecting, but it's still below the average, in the US. So putting that into context for us, it's very important for us as South Africans to watch those job numbers. There is a saying that if the US sneezes, the rest of the world catches a cold, which is quite true when it comes to the US economy. So the moment that the US economy starts to weaken, it tends to have an impact on the rest of the world because it's the largest economy in the world, and also in terms of what the Fed is going to be doing.
And maybe the converse of that is the phrase we need to find if the US doesn't sneeze, like in this case here, if they are creating more jobs than is required, what does that mean for the USA? But very importantly, what's the cold example in South Africa? And I don't know what it is, but someone needs to work out a phrase to say what that means for the rest of the world. Thanks for that. Or anything else you want to pick up on?
Yeah, so I think there was an announcement that was made by the IMF, which I think is also very important, also related to the growth. But in this case, they were giving us their projections over the next 5 years in terms of what they expect the global economy to look like. So essentially, I think the release was quite concerning. The IMF is expecting the global economy to grow at a rate of 3% per annum. Which is way lower than what the global economy has been growing over the past few years. So when you look at that half decade, it's going to be the lowest since 1990. And what they're looking at, they raised quite a lot of issues in terms of what they expect to drag down the global economy. They're talking about geopolitical issues that are happening. There's the global is somewhat unsettled when it comes to geopolitics. We're seeing what's happening right now in Ukraine, the war between Ukraine and Russia, and we're also seeing that the US and China are sort of the tensions are rising when it comes to Taiwan, and we're seeing a lot of other things that are happening with currencies and stuff like that. So the IMF is concerned that those risks are likely to pull down the global economy. They also mentioned the issue of high inflation, which is, I think it's a no-brainer. We've seen prices are rising at a faster pace over the past few years, and they expect that to continue for the next few years, which is going to sort of erode the purchasing power of consumers' pockets. And also they talked about the actions which the central banks have taken. They've increased interest rates in most cases, and what that's doing is basically to increase the cost of borrowing. And we've seen the banking crisis emerging as well in the US. So they're concerned about those things, and they believe that that's going to put a weight on the global economy. So we're going to see the global economy growing at around 3%. That's very concerning for us as South Africa as well, because we rely on the global economy. We export to China. We want the US to be in a good state. We export to Europe quite a lot of our products. So if those economies are struggling, it means that we are also going to be affected as an economy.
Absolutely. And therefore, I'm concerned. The question is, are you concerned? Orin, appreciate your time. We'll chat, I'm sure, tomorrow. Orin Tambo from the team at 27.4. He's the head of investment strategy there. Right. We've got more coming up. We'll talk to Kareem Leroux in the feature called My First Ramadan. We'll also chat to Catherine Constantinidis. She's been spotted in the champion spotting feature. But before that, we'll talk to the team from Al Imdad about their rescue relief efforts around that horrific accident on that road between Durban and Johannesburg. In fact, yesterday on the last day of the long weekend.